All right. What is up? Welcome to REI 101. So glad to be here. Alberto, my brother, how are you, sir? Happy
Doing well,
Monday.
man. Doing well. Loving this Monday, loving this weather. Got a 10 miler in right before this. So if you see me yawn, it's not because of the content. It's just because I am tired.
You
Sorry.
pushed yourself 10 miles? Yeah,
Yeah.
that's just a jog in the park for you, brother.
Yeah, but I waited too long to do it. And I was gonna have a busy afternoon. So I was like, all right, I've got Austin's call. We got the call coming up. So let me see if I
Yeah.
can just kick out this 10 miler real quick. And I'll probably take a nap after we're done with this call.
I got to get back on at the trails, man. You are my inspiration when it comes
Let's go, man.
to anything more than 2 miles.
Let's go.
So cool, man. Today we have this whole month is amazing. Our guest Andre last week really brought it home, and there is an encore for Andre, and I think there will be an encore for our guest today because the content, and I see people jumping on the content that we're covering today is probably, in my opinion, the make or break when it comes to a lot of these real estate owners because um, we know a lot of people that have big visions. They have a really big and glorious idea of how filthy rich they can become as an entrepreneur, especially as a real estate entrepreneur, buying and you see it all on TV and we got all the other podcasts, but that's not who we are. We're not your typical gurus. We don't have a cruise that we're trying to charge $3,000 on for you to learn the real tricks of the trade. This is the real trick of the trade. The trick is not a trick. There is no
Mhm.
secret to success. And today's one of the most important episodes because, in my experience, in Alberto, I want you to tell me about yours because I know you're dealing with a lot of people on this too. In my experience, some of the best deals are complete trash because they're missing this one critical practice in their business and they're not mastering the books and it's not clean and they don't understand why and they're very defensive about it and it's very annoying and we can't get anywhere and it's my fault. So what do you think?
I've seen investors say they've made 20 or $30,000 on a deal, and when it's all said and done, we actually look at what they tracked, and they probably made $5 or $10,000 because they're not properly tracking and doing their bookkeeping and tracking expenses and things like that, and things get out of hand. But they don't see it, so they don't know, and that's
Yeah.
just a really vital piece of information. Whether you own one, I mean, even if you just own one property, we started with our very first flip. It was in a spreadsheet, but we tracked every single expense. I
Yeah.
mean, even like bank fees, wire fees, just every little thing. And then at the end of the day, right, when we closed out, we sold that property, paid everybody's commissions and everything,
Hmm.
got all of our money back that we put back into it, and then we looked what's our true profit, right? And
Right.
then figured out tax it, put some away for taxes and things like that. But there's people that kind of start this business and go on for a really long time with
Yeah.
really no good bookkeeping,
Yeah.
and can get into some tight spots, when it comes tax time to
Yeah.
try to figure out everything.
100%. I think that I think that anybody can say, like you said, I made 20,000 or I made 40,000, but like who can tell you that they made $16,543.21? Like when you
Yes.
know your numbers and you can become that's the guy that I'm impressed with. So most investors, we are not failing on the deals. And I think this is the critical takeaway before I introduce our amazing guest. It's not the deals that we're failing on. It's the freaking operations.
Yeah.
And in my experience, currently and past experience, this is certainly the case. So we're going to be talking about bookkeeping, separation. Are they boring? I don't think this is boring at all because when you understand it, it's very, very exciting. Because when you're trying to lose weight and you see that number go down, that's not boring. That's something to celebrate. And so if we want to achieve big numbers, we got to track our numbers. We got to know our numbers. And that's why we have our guest, Lynn Sparks, on the show. Lynn, thank you for being here today. How are you doing?
I am great. Sorry, this is first podcast ever, so be gentle. All
Well, we're hoping to get you on as a regular guest because
right.
with my conversations with you, I feel like I've learned a lot. And Lynn's, you've been generous with your time. She's been to our market center educating and teaching, and so yeah, this is important. Lynn, glad you're here. Thank you.
Thanks for having me.
All right, so Lynn, tell us a little bit about who you are. What do you do? What do you not do? And your background and what services you offer.
Okay, so I have a boutique accounting business in that it is small. I deliberately keep it small in order to personally service all of my clients. Um, I have done this for almost 30 years as a self-employed person. And so I know a lot about a lot of different industries
Hmm.
from the accounting side of it, but I also understand what it takes to be a self-employed person.
Right.
And you can be in any number of industries and still have to know how to be self-employed on top of being um, successful and effective at your chosen field.
Right.
So they are not mutually exclusive. And I
Boom.
really,
Preach.
really love educating new business owners. That's one of my favorite things to do when a longtime tax client comes and says, I've started a new business on the side and I want to be full time at it by this date because I get to get in on the ground floor and
Yeah.
explain to them how important their bookkeeping really is to their business.
So what I hear you saying, it's better to call you before we try to do everything on our own and just get you on board
Oh,
first.
absolutely. It is so critical. So, when you build your team, to help you in your business. You have admins, you have staff, and even if it's just you on your own, you still have support people that you reach out to. You
Hmm.
reach out to your banker, your loan officer, your friend who does it and is successful. They're a mentor to you. You have to have someone that's going to be able to direct you in keeping good records
Right.
because it is critical for success to know what you're spending and where you're spending it.
So let me ask you this, because you
Hmm.
work with clients at different levels. And
Hmm.
Albert, I love how she is. We talked about buy box a couple of weeks ago. Like you know what your clientele is, and you know what you have an idea of how you want to keep your business, and that gives you a lot of control.
Yeah.
Um, what are some of the mistakes, maybe top two, top three mistakes that you're seeing consistently across the board with small business owners?
So from an accounting perspective,
Hmm.
is thinking that they don't need to keep track of it contemporaneously, or thinking they can that they know what their business does and they can use estimates,
Right.
rounded numbers. So those are the two big mistakes. Wait, are you guilty of that? Is that
Alberta.
what that
I've got one more.
is? Okay.
Thinking that you have time to do it later.
Yeah.
Mm-hmm.
That's
Well,
that's a
yeah,
big
and
one.
that falls in with the contemporaneous,
Yeah.
so just IRS regulations, a lot of substantiation for IRS for your tax filings,
Hmm.
they state specifically that you have to notate the expense and what it was for when you spent the money.
Oh, that's not
Not
true. You're
not a
making
year
that up.
later.
That's
Not
not
a
true.
year later. Not when you do your tax return, not when somebody calls you on it. It's supposed to be done when you spend the money. So going back is, if you think, well, I didn't do that much, so I'll be able to remember that I did that. That's where you lose deductions. That's when you leave money on the table. That's when you think you made 20,000 and you really only made five because you forgot about all those things that you didn't record when you spent
That's
them.
that's huge. So you're saying there's a layer of benefits uh,
Yeah.
of tracking all your expenses, income and outgoing,
Mhm.
as quick as possible. You know, um,
Mhm.
you're saying there's tax deductions, tracking, but also it's just good. It's good stewardship of what you have, of your finances and your assets. It's just being a good steward of your blessings, and that's
Absolutely. And that's a great comment too, because, unless you are, single and have no kids and no family and no responsibilities other than to yourself, you're responsible for those funds to other people. And some of them may not be related to you. They may be related to the people that you pay to help you.
Mhm.
They may be your customers, I wouldn't be a very effective accountant if I didn't keep my own books in order,
Right,
So I have to know how much I need based on how much my tax software costs and my accounting software costs to know what to charge my customer.
right.
So if I'm undercharging, I'm doing myself a disservice. I'm not being a good steward. If I'm way overcharging, I'm not being a good servant to my clients.
Yeah, 100%. So let's go into why bookkeeping is the backbone of real estate investing, because I certainly think it is. Like we said earlier, it's more important than finding the right deal. You can find the right deal, keep poor books, you're in trouble. You can get a bad deal, get good books, and you can find a way to keep it alive and do well. So
Exactly.
why do you think that um, investors, especially real estate investors and small, this probably a lot of what we're talking about today will likely apply to all types of small business owners, not just on the real estate side, but especially
Mhm.
on the real estate side. Why are small business owners, why do they tend to delay bookkeeping? Like Albert said.
I think the biggest issue is fear of the unknown.
Mm,
So I get a lot of clients that say, I don't understand it. I don't know how to organize it.
Hmm.
I don't know what you need. And I'm afraid if I do it, I'm going to do it wrong.
Hmm.
mm,
And then I'm going to have to do it again
mm,
or do it over, or you're not going to understand. So I think that you have to understand that accounting for your business is as important as finding a customer for your product. It is as important as
That's good.
finding the right person to buy that property or to contract to repair that property for you to flip,
Yeah.
because you understanding how that impacts your financial situation has to be at the key, because you're not working for charity, you are working to make money,
Right.
and you want to do it efficiently and you want to maximize your profits, and if you don't know where your money's going, you should not be in business.
Yeah.
you
mm.
you should not be doing that. You should work for someone else, and that way you don't have to worry about
That's yeah, 100% on point, Lynn. If you can't track those, if you can't know those numbers, you don't own a business, you own a problem.
it.
Right.
Exactly.
Yes,
Yeah,
sir.
and it can become a big problem.
So to me, going back and Albert, you can give me. I'm really interested in your perspective. But early in my small business life, and I've been working for. I like to say I've been working for myself since 2013, but I've actually been working for hundreds of people because every client is my boss. Um, I originally looked at the bookkeeping as an administrative task. It wasn't strategic. It took me a few years for it to be like to realize like bookkeeping is a strategic part of growing a healthy business. It's not just an administrative task that I need to do because you weren't around back then, Lynn, but there's bookkeepers and CPAs out there going around telling people that the reason you need to keep good books is to make your taxes easier at the end of the year. And that never settled right with me hearing people say
Hmm.
that.
Hmm.
But a lot of CPAs have said that. What about you, Albert?
Yeah, I mean, I admittedly handled it more of just like an admin task, until I hired a good CPA who also handles bookkeeping as well. And really, he trained me and helped me understand why it was important, right? Because I looked at it as just, okay, this is just paperwork. I'm gonna sit in front of my computer for an hour or so. You would try to do it once a week, then it got to like once every other week, then it got to once a month, and then it got just annoying, right,
Hmm.
to me. But then he would get me back on track and help me understand. It's like, okay, we have to keep doing this. There's a strategy to this. At the end of this, yes, of course, it does help with streamlining taxes and getting all those things. But like Lynn was saying, is taking care of these things at the time that you have these expenses. When we have large expenses, right? We're paying contractors 30, 40, 50, builders. I made $150,000 wire to a builder, right?
Hmm.
So being able to, I need to track that. Like, obviously I kind of know where that's going, but mixed in with everything else, those things get lost. So I admittedly in the beginning was just treating it as an admin task, right? But then understanding that there's a method to this.
Yeah.
So
I
yeah.
mean, what do you tell people, business owners that say, "Hey, I think I want to do it by myself. I want to do my own books." Do you encourage that, or do you have any words of wisdom for?
Sure. No, I mean, if someone says I can do this, I want to do my own books, then I'm all for that because, they it, bookkeeping is not cheap.
Hmm.
Cheap
Mm-hmm.
bookkeeping is not good.
Mm-hmm.
So, keep in mind you get what you pay for. You have to have someone that knows what they're doing. So I always encourage them to hire me to train them.
Yeah.
So I'm fine not getting a new accounting or a new bookkeeping client if they'll let me train them. Spend
Okay.
an hour with me and let me show you, let me set up your chart of accounts, let me explain why we do this.
Yeah.
And one very real aspect, and this is when you start hitting people's pocketbooks, that's when they pay attention.
Mm-hmm.
So, yes, we got all the reasons for keeping track of the big wires, which property did that go to? And you've got 10 going on at one time. You have to know where those expenses went to know how much to sell the property for when you
Right.
get done, right? But when ultimately the whole reason you do this is to make money and you've got to report it to the IRS.
Yeah.
So, yeah, taxes are kind of the backstop. But when I explain to people, well, if I don't know and you can't tell me how much you've made during the first quarter, second quarter, third quarter, fourth quarter, then you're going to owe penalties because you haven't made estimated tax
Right.
payments properly.
Mm-hmm.
So that can be a very real, impactful um, event on someone's checkbook
Hmm.
because they didn't keep good books.
Mm-hmm.
So let's throw $2,000 worth of penalties on there that I'm sure you could have used somewhere else
Yeah.
just because you don't keep up your books.
Mm.
So
I think,
education's key.
I think when you get some newbie, whether it's investors or small business owners, and they may tell you, yeah, okay, I want to do it on my own, and maybe they don't really, I don't need training, I can figure this out, and then they come to you, right? To now they need your accounting services or CPA services, and they bring their books to you, and they're just a mess,
Hmm.
at that point. Like what do messy books like hide in their business?
Oh, well, so the word hide um, to me evokes an intentional
Or what do
mis
you uncover when you're working with messy books, I guess?
Okay, so that's a good, well, and the other is a valid question also,
Yeah.
right? So
Hmm.
people think that they can, not put stuff in there, they can hide personal expenses and their,
Mm,
meals, that kind of thing. That happens, right? And just having the information and knowing what you're looking for is important. But the biggest thing that gets uncovered is that they haven't captured all their expenses.
mhm,
Hmm.
You're leaving money on the table if you're not accurate. So I highly stress actually reconciling your bank account,
mm,
separating out your business account, go through the reconciliation process, make sure you keep a cash log. You may think pulling out a 20 to give to, the construction manager because that guy can't stop whatever he's working on to go get him lunch. You may think that doesn't add up, but
Hmm.
it does.
Right.
Hmm.
It does. So the biggest thing that you leave is money on the table.
Yeah. 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 You don't want to do that. So
Mm-mm,
definitely don't want to do
mm-mm.
that. I think, we touched on it a minute ago is, Austin, you mentioned it is, or people are just maybe they're afraid of what they might find, right? And so then that kind of evokes this emotional response, right? Um, I mean, so what's like this emotional reason, I guess people just avoid their numbers? I don't know. It's just hard to understand sometimes.
I do a lot of hand holding at tax time. And I think, again, fear. Fear is the overwhelming emotion. And, some of it is fear of the unknown, but they're also like, I'm scared I'm going to owe taxes. It's inevitable. You're
Hmm.
going to, and the way you alleviate that is knowledge.
Hmm.
So understanding how the tax system works and why we pay it, how we have to report it, what's deductible, what's not, just understanding all of that and getting past the mentality of I don't want to pay taxes or I shouldn't have to pay taxes. Um, that's not reality.
Hmm.
So you can try to avoid them as much as possible, and we do everything we can to mitigate your tax liability. But having, countering the unknown with the why we
Hmm.
do this
Yeah.
is really critical for people to change their viewpoint, their mindset on their
I,
bookkeeping,
I think it's a state of denial that we can all relate to in some degree or
Mhm.
another.
Everybody's been there, right?
Like, because like, I mean, Albert, like I saw your before and after photo the other day on social media. Like, you've come a long way physically,
Yeah.
health wise, you
Yes.
know. But when we're in a state of our life where we're not eating right, we're not exercising, we're not taking care of our body, are we thinking about stepping on the scale? I mean, to me, it
We don't
seems to
want to
be the
see that
same.
number.
What's that?
We don't want to see that number.
Yeah, we don't want to see that number because we know it's not going to be, we're not going to like what we see. However,
And
that,
yeah, I get clients who don't want to see it.
Yeah.
I mean, I've had people call me and say, I am 3 years behind. And, I'm like, okay, this is what we need to do, and never hear from them again,
yeah, yeah.
because it's too much. Most people are like, all right, let's work through this. I understand, let's get it done. But
Mm.
some people you just don't, you
Yeah.
know,
Yeah, you just have to, what do they say? You just have to eat the frog, right? Just get
eat the
over it,
frog.
eat the frog and get over it and then move on. You
Right?
know. Yep.
So I think this is a huge thing to hit on because this is a pain point that right now, if you're watching this on YouTube or listening to it in your car and you're still with us, hang on because I know how it feels to have a business and be completely lost when it comes to the numbers. And this is not it's not if it's one of those things that feels easy when you do it, but when you're not doing it, it feels impossible, right?
It does. Hmm.
So we want to certainly offer some very, very simple and practical and inexpensive ways to get started. Going back to your goals for 2026, success leaves clues. If you interview any successful business owner, they're going to tell you that they put this kind of activity on their calendar. There is no compromise. What do you think, Lynn? Do you think once a week is good enough to look at the books and review things and get caught up with your numbers and review your bank statement?
I think any cadence that's regular and scheduled
Hmm.
is is valuable.
Yeah.
So it may not take you 10 minutes to look through
Yeah.
everything. If you use a program that connects with your bank, like FreshBooks or QuickBooks or one of those things, it's easy. It's so easy if you stay on top of it and you have real-time accurate information at your fingertips.
That's
Uh,
true. That's true. If you get that cadence going,
Mhm.
don't fall behind though.
so get it on your schedule, get it on your time block. By the way, if you're on the call and you have any questions for Lynn, feel free to drop it in the chat. Um, Other thing is just be accountable. That's a huge perspective of high successful people. Um, your spouse is probably the best first. If you're married, that first step is be accountable and, communicate with them. You can be accountable to your bookkeeper and your CPA, other business owners, put it on your calendar and share that with each other. So huge thing right there. I'm going to go into a little bit into the nitty gritty of some strategies. Um, Albert would probably be a good case study to talk to. I'm catching up with him on my portfolio. Um, how do you how do you recommend somebody that has multiple properties? Like, what are some good strategies to use to kind of um keep it organized and keep it making sense and really keep a good pulse on the health of your business when you own a series of properties?
Oh, for me? Oh,
Yeah, either one.
yeah, yeah, yeah. I mean, again, I was doing everything on spreadsheets before when I first got started. I had a tab for every property and every project. And over the last 5 years, we've done 30 deals. So that wasn't scalable. And we're on our second CPA, and we've been with him for maybe a little over 2 years now. And he was night and day with the first person that we worked with. His communication style was really great. But what he did was similar to kind of what Lynn does with her clients is he was really big on training and education, right? And I'm just real like I'm really like detail oriented. I want
Hmm.
to know like the nitty gritty. I want to know like why are we doing this? I'm also listening to the podcast and watching YouTube videos. So we talked about this last week. I'm like bringing things to Andre, thinking like, oh man, I'm gonna stump him. Like
Yeah.
he's not gonna know this. And he's like, oh yeah, yeah, we can do that. I've already thought about it. I've already got it here for you set up. I'm like, what? So, but he helped me with getting set up in QuickBooks. Going over from spreadsheet to QuickBooks. I still do things in a spreadsheet too, just because I'm just old school and I'll put things in a spreadsheet, but I put everything in we've created all our chart of accounts in QuickBooks too. And it's easy to kind of just run P&Ls now for per property. Like for all of our 11 rentals, I can go back and look and say, okay, cool. I look at the bank accounts I probably look at the bank accounts 2 times a week just to make sure nothing weird's going on. And then I'll get in and do like basically just
Hmm.
categorize my expenses, right, per property. That's kind of how I separate those things. I've been doing it since the beginning. And then we're going to talk about LLCs and stuff like that next week, but we have like an S Corp, for our flipping business, like more of our active business
Yeah.
there. And that's where I get my salary from. And then we have our LLC. My wife and our LLC is more of like the kind of passive. That's where we have our rental income coming in and things like that. So, and he's the one who told me like this is probably the best way to do it because you want an income, you don't want to pay double taxes on things. So you don't want your LLC to pay you. You don't want to buy anything in your S corp as well. You don't want to hold any rentals in your S corp.
Hmm.
So very knowledgeable on getting all those things set up. But it was game changer for us is finding someone like Lynn and Andre that can help
Yeah.
you understand those things and educate you. I was big on education. So
Lynn, how do you recommend somebody set up their books if they're expanding their portfolio?
Yeah, so I to be honest, I hated QuickBooks Online when it first came out. It was incredibly slow, um, not very user friendly. It has greatly improved.
Hmm.
And the ability to set up different classes. So with accounting and multiple revenue streams, you could either have a really long chart of accounts or you can have a really condensed chart of accounts that you can expand out per property. So what Alberto has is, a nice condensed chart of accounts, and each property he can run a separate profit and loss on. Very easy. And it's really user friendly. Um, and it saves so much time
Hmm.
and effort. So I will say that any type of organization is better than nothing. So you come to me with a spreadsheet, I'm not going to reinvent the wheel for you. But
Hmm.
when you're ready, will convert you to something that's better. But if someone says, I love my spreadsheet, I understand how it works, and I'm happy with the information, then I'm good with it. And if you want
Okay.
to keep using it, more power to you, right? But having and I want to say this too, the cost of your bookkeeping software should not keep you from using a software package.
Right.
So I have a client right now that he's construction and he does a lot of repair work. And he asked me the other day to look at downgrading his QuickBooks Online. And I just said, we're not going to do that. You run an $8 million gross revenue construction business and you've got a problem with a $250 a month software bill that runs your entire business.
Yeah.
Yeah.
We're not downgrading
That's not
anything.
an option at that point.
Not
You
an
need it.
option.
Yeah. You may need an upgrade more than a downgrade, it
Well,
sounds
and
like.
that's what I talked to him a little bit about. It was like, you bill through here, you pay bills through here. So um, keep in mind that when you're going into business for yourself, that should be a fixed cost for you.
Hmm.
It
Got
should
it.
be part of your initial budget in some capacity. And because having separation of your expenses is can be really critical. You
Yeah.
don't just throw it all in a pot and you know let
So
that be okay.
I want to put a bookmark in this because I want to expand on this because this is uh, very pertinent to where I am in my business as well as other people on the call. Quick detour. Chart of accounts. Explain that for somebody who doesn't know what that is and how to get started and why this is like why understanding chart of accounts is going to make your life so much easier doing your books.
Okay, so down and dirty, a chart of accounts is simply a method of categorizing your income and expenses.
Hmm.
So think of them like little buckets in your big business bucket. And when I spend money on office supplies, that expense goes in the office supplies bucket. When I pay a contractor to do something for me, I that goes in the contractor bucket. So a chart of accounts is simply a way to organize and give your information to someone else that is consistent with other businesses
Hmm.
and consistent with what you're going to end up having to report on your personal tax return or your business tax return, right? So there are categories that everyone spends money on: advertising, office
Hmm.
supplies, promotion, uniforms, possibly. All of these expenses are common. And when you go to do something like sell your business or take out a loan because you want to expand your business, you have to be able to present to the banker, the loan officer, a potential, client or customer that wants to buy your business. You have to be able to present to them the history of what you've done
Right.
financially. Does it make money? Where does the money come from? Where is the money spent? And it needs to be in common terms and generalities that everyone understands. And
Right.
that's what your chart of accounts does for you.
Yeah, they're labels. They're how you categorize and organize whatever
Mhm.
it's not just your expenses though, it's your various sources of income. It's any payment that you
Absolutely.
receive.
Mhm.
Albert, you have something?
Yeah,
You're
Austin,
on the edge of your seat.
yeah, we can oh, yeah, I'm getting antsy now. I'm like, oh man, Lynn's like she's turning all those little switches now,
I
turning
Yeah.
hitting
love
every little switch.
it.
We can go on another short detour, Austin, especially with you on the commercial side, is how many deals kind of get blown up because these mom and pop, small multifamily properties have terrible books, and like Lynn just touched, like hit the nail on the head. It's just like, how do we know how profitable your business
Yeah.
is? Where is the income coming from, and where are the expenses going? And somebody hands you a notebook and, a shoebox of receipts, and they're
Yep.
like, hey, my property's worth, 2 million dollars, right? Like that's just not gonna fly,
This
right?
is
And
a
so,
pandemic. This is an
yeah.
absolute epidemic in the real estate world. And
Yeah.
Anna and Hal are both on the calls, and they can completely attest with what I'm saying. This is something that shouldn't be that hard, but for some reason it's it's a nightmare with so many property. I mean, Lynn, you know this. Like you and I have worked with clients that just could not like understand why this is simple and easy and critical at the same time. So I've got I've got a couple of just like simple questions for you. So I own, and maybe you can give me some practical advice. The best way I feel like to think about this, like say I own five different properties and I'm running everything through the books. Like we already have a problem right there because when my wife looks at an expense that, you have a $500 expense to Home Depot. This is probably an everyday occurrence for so many investors out there. And she asks, what is this for? I may say, I needed to replace a part. I need to do a plumbing repair. And she's like, for which property? And I'm like, I don't even remember. So number one, I think it's okay what you're saying. If you know how to code your books, it's QuickBooks Online is designed in such a way where you can have everything going in and out of that one QuickBooks account as long as you're coding, as long as you can tell her that this $500 plumbing repair was for 123 Main Street and not 345 Easy Street, right?
Mhm.
So when I have a shopping list of 20 things to buy, this is where I imagine books start to get messy. Correct me if I'm wrong, but in my head, this is where things get messy. And you pretend like it's a grocery list, and you just buy everything on that list. And those 20 or however many items are for various properties. Like, what do you do at that point? Like, how do you know? Like, how do you separate? $50 was for one and $200 was for another house. Do you just like go back to the end of the checkout aisle like five times and get five different receipts? Or what's the most practical? Because in my mind, I think that's where things get messy is because they don't know where,
Right.
right?
Yeah. So on a small scale, so in your situation, what QuickBooks Online, FreshBooks, all of those things have mobile apps that
Hmm.
have receipt capture. So you can actually take a snapshot with your phone of your receipt when you get back in your truck, and you can split. It's called splitting. So
Hmm.
basically, you take that charge and you split it between the different buckets or the different properties, right? However you need to. Um, you so I mean that's like the super easy thing to do. Just do it right then. Get in
Yeah.
your truck. Worst case, you pick up a pen and you write on the receipt which property each expense was for. Or you can write on the bottom of it repairs for three houses,
Hmm.
1/3 each.
Hmm.
So the IRS doesn't hold you there. No one is going to go look at a tag on a piece of PVC pipe and determine whether you put that in house A or house B,
Hmm.
right? So as long as you have a consistent and rational and reasonable method of separating your
Yeah.
expenses, you're fine, right? So if you've got multiple things going on and you got to go to the supply house and buy supplies for 10 different properties, break it out 1/10 each. If you've got something major, then you buy it on its own,
Hmm.
Hmm.
order it online and pay for it separately
Hmm.
and assign it properly at that point. Or use purchase orders. If you're
Okay.
in the business, like
Hmm.
I'm not sure exactly what all you do, Alberto, but for my construction client, they have pro accounts
Hmm.
at those big boxes. So they can place an order online and assign it to all of their different
Yeah.
purchase orders, their properties. So the important thing is to not be inconsistent. You want to be consistent with how you handle things. And coming back and saying, I don't know which house it went to,
Yeah.
Yeah.
doesn't do anybody any good. Yeah, you'll still get the deduction, but when you do that 15 times throughout the year and you've assigned it to the wrong property, all of a sudden it looks like maybe you lost money on a property
Mm,
that you should have made money on. So it's not fun. A lot of people think it's boring, but if you can flip your mindset to be, this is critical to my profit margin,
Yeah.
mm,
that I account for this properly. If you can make that as important as getting it done right, putting together the proposal and making it look nice, if you can equate that with all of those other parts of your business, then you're going to be set up for
Nice.
success.
yeah. I thank you, Lynn, for the validation. So
Yes.
I've done all of those things that
Yes.
she just described, right? And Austin, I've been there too. With 11 rentals, it's not I mean, most of the time I'm just going to the Home Depot or someplace to buy something for one particular rental because I need something then. But sometimes I'm buying supplies, right? With our Airbnbs, I might buy supplies for three houses,
Hmm.
and it just doesn't really make sense for me to go do three transactions. But
Right.
I'm like, okay, I just spent $150. We're going to spread that across three. And when I'm in QuickBooks, QuickBooks isn't telling me, okay, the toilet paper went to this house, the trash bags went to this house. It just sees the transaction as $150. And I go into QuickBooks and click split. I'm like, boom, three houses,
Yeah.
50, 50, 50. And we've done that too on large expenses where maybe it's for a flip and we might have a flip and construction or two flips going on is now I have to buy appliances for this one. So that's, $2,000 that I'm paying there, but I also have to get this other things from Home Depot. And I really, anytime I'm at Home Depot, whether I'm at the cash register or I'm online, I always put my PO number there
Yeah.
because then I can go to my pro account online and say, okay, cool, I've got all of these expenses for the past month, and I just say PO, and I just put the street address, I just put the street number like
Yeah,
225, you
yes, and
know,
I'm glad you said that because it doesn't have to be complicated,
no,
right?
no.
You don't have to have a formal purchase order system.
Mhm.
It can be just some sort of memo that tells you what property that's
Yeah,
associated
Yeah.
with.
yeah, that works really well. So
And then
Yeah.
when your
really
books
like,
are clean and neat and pretty like that, and you have 5 or 10, 15 properties, you can look at how profitable is my business
right.
overall.
Hmm.
But then you can look at each individual property, and if you classify everything appropriately, you can say, oh, well, what's the most profitable unit in my
What went right? What went right? What went wrong? And you take out the mental math
Yeah.
Hmm.
of having to remember, oh no, we had that big problem with this property. That's why this one's low. You don't
Hmm.
have to do that anymore. It's in black and white for you
Hmm.
It
in your
tells a story.
books. It does. It absolutely does.
Yeah. It helps you remove some of the emotion too, when you understand how profitable a property is, but maybe it's a problem property. So emotionally, you're just like, oh my gosh, this property cost me so much money.
Yeah.
We did all these things for it last year, and you go back and because you kept good books, just go, oh, well, actually, we did pretty good. So, and then you can it's a strategy, right? It's a decision. Is it worth the stress, right? That profit that
Hmm.
we made on that property last year, is it worth the stress and how I felt about it?
Yeah.
Are there things that we can do to clean that up? Or is it time to dispo that property and just kind of move on to the next thing?
You,
But if you don't have good
And
books, yeah, you can't do that.
exactly. And the next time you have a property that reminds you of that property, you can make an informed decision
you're
about
bringing
whether
us
you want to
back to
do it
our
or not.
buy box. I love
Yes.
that.
Yeah. Awesome. Love it.
Because you may have two properties that on paper are performing equally, but one is taking 20 times as much of your time and energy and resources. And so when you're able to track uh, your NOI and compare it to your time invested into the property, yeah, Lynn, you're 100% correct. Like you can start to really narrow in your buy box and start
Mhm.
offloading some of your problem properties.
And not
Hmm.
making the same decision again,
Yeah.
correct your behavior.
Who
Hmm.
knew that the topic of mixing and separating in books is just such a fun thing to talk about, right?
And we didn't even make it through half half of what we
Okay,
I
wanted
so
to
know.
talk about. It's just so good. It's so
we're
good.
gonna have to bring you back, Lynn. You
Yeah.
can't say no because um, this is to me this is a big deal. I think a lot of investors are really losing a lot of money, and it's our job as coaches and leaders and teachers to help educate and share the gospel of good bookkeeping with all small business owners out there. Lynn, how can we get in contact with you? How can we get connected?
So my website is sparksexecutive.com. And I have a contact form on there. So, if anybody is interested or needs, I have a few resources. I do have some cheat sheets available, which is kind of a very simple list of buckets if
Hmm.
you want to categorize your expenses. If you're starting out as a hairdresser and you need to know what kind of expenses are deductible, I actually have a realtor one on there as well
Good.
to help people starting out, just to kind of give them a visual of what they need to be keeping track of, right? And I am up for, teaching, education, review, whatever, whatever. Happy to help.
Love it. All right.
Awesome.
Albert, any last words?
No, I mean, I'm geeking over here because I just like all of the education and the
Yeah.
numbers and the data. So like this stuff is not boring to me. I'm glad that we had this call today.
Well,
Thank
Lynn,
you.
thank you so much
Thank
for,
y'all for having me.
yeah, for your time. Very fascinating stuff. Hey, REI 101, this is episode 41. These are going by quick. This was just an idea Alberto and I had, and it's taken off. So appreciate everybody jumping on the call. This will be on YouTube in the next 24 hours. So make sure you like and subscribe and hit the notification bell and write comments and go back to some of our older episodes and comment. Also, we are on Apple, Spotify. So join us. And this is on Facebook Live too. So we are
Oh my God, I'm
everywhere.
so glad I didn't know that at the beginning.
Yeah. Oh, we're in other places too. You'll
Oh,
see.
Lord.
All right. Until next time, I'm Austin. This is Albert. Thanks, Lynn. Have a good one.
Thank
All right.
you.
Bye.